As we head into summer, the DFW housing market continues to be driven largely by mortgage rates, and right now mortgage rates are being influenced by developments overseas as much as anything happening here at home. Let's look at what happened in May. Closed sales were essentially flat compared to April. New listings surged by about 9%, which is typical for the spring and early summer selling season. Months of inventory remained virtually unchanged at 3.04 months, and days on market held steady at 47 days. One number that stood out was total available inventory, which increased by just over 10%. At the same time, showings dropped nearly 19% from April to May. That tells us more homes are coming to the market, but buyer activity has softened as mortgage rates moved higher. Home prices have remained surprisingly stable. The median sales price ended at $399,450 in May, a gain of about $3,450 over April. Mortgage rates, though, are the key story right now. Rates ended May at approximately 6.53%, climbed as high as 6.68% in the second week of June, recently eased back to 6.58% following the announcement of a preliminary peace agreement with Iran. If progress continues on that front, we could see some additional relief in mortgage rates. However, after the last positive jobs report, many analysts now believe the Federal Reserve may delay rate cuts, and some experts are even discussing the possibility of future rate increases. Mortgage rates are driven primarily by the bond market, but bond and stock markets react quickly to both actual Fed decisions and expectations about future policy. So what does all this mean for buyers and sellers? For buyers, this continues to be a market where negotiating power exists. Take advantage of seller concessions, rate buydowns, and price incentives, especially in new construction communities. Waiting for significantly lower rates may be a losing strategy right now. If rates move higher, the same home could become less affordable even if prices stay flat. For sellers, pricing correctly is critical. Expect a market with flat to falling pricing in many price ranges and be prepared to offer incentives to help buyers overcome affordability challenges created by higher rates and closing costs. The good news is that if you're selling and then buying another home, many of the concessions you offer on the sales side can often be offset by opportunities and negotiating leverage on the purchase side. As we move deeper into summer, I expect any short-term price gains to be driven more by seasonal demand than by strong market fundamentals. Mortgage rates will likely remain the biggest factor in determining where the market goes next. If you'd like to discuss what these trends mean for your specific situation, reach out and let's talk.